JPMorgan Chase agrees to pay $920 million in fines over its London whale trading losses from last year. I'm here with Dan Fried, senior writer for TheStreet. So, Dan, the fact that JPMorgan admitted to violating federal securities laws, what is the implication of that?
Well, it's a big deal. Legal experts seem to think. I mean, the SEC has gotten a lot of criticism over the years for allowing big institutions like JPMorgan to neither admit nor deny wrongdoing when they settle cases for millions of dollars. Lots of criticism over the SEC for that. There's a new chairman, Mary Jo White, a former federal prosecutor, and she, wants to change that. And so here she's done it. She's gotten the bank to admit it, but admit wrongdoing, but not fraud, it looks like.
Right, you have to be careful about what it is exactly that they admitted to, right?
Precisely, yeah. They seem to have admitted failure to supervise, which, it could still expose the bank to some liability, but not nearly as much as fraud.
So what is their liability now?
Well, the bank set aside an additional $1.5 billion in litigation reserves for the third quarter, so that gives us some indication. But we're sort of in uncharted territory here.
Now, the stock did not tank on the news. So, what is the future, the landscape of JPMorgan like in light of this?
Well, first of all, this has been leaked, and so today's announcement is official, makes it official. Investors were well prepared for this. But also, really since the crisis, there have been so many lawsuits and so much regulatory activity that it's just very hard for anyone to really figure out, exactly what it's going to cost. It weighs on all the bank stocks. It has for years, but it's hard to say exactly how much it's worth.
So it's not per se that markets don't think this is a big deal. It's actually more a fact that the news was already priced in.
Yes, I would say that's right.
All right. Well, thank you so much, Dan Fried. I'm Brittany Umar for TheStreet.